Welcome to Your Money Matters. My name is Cabot Ray with Mike Martinez, who is the founder, the CEO of the Pension Group. And he's been dealing for over 2 decades, almost 3 decades, with how to financially plan for your retirement. All the various options out there. What are the best for me? I'm not the same as this person. And you have to look at individual cases. And I'm sure you deal with people who are a little nervous about the risk reward of just putting everything in stocks, right?
Yeah, they are. I mean, I don't think the majority of people, necessarily have the appetite to put everything in the market. Some,
right.
Some people want to have guarantees in place, and that's kind of where annuities kind of come into play. Annuities are designed to really do what? Protect you from market downside volatility, but also provide guaranteed lifetime income. And again, we have a lot of clients that look at annuities. And one of the things I would really stress to people is, what you bought 5, 6, 7, 8 years ago is not the same what it is today. Why is that? And it's simply because interest rates have increased.
And inflation.
Well, inflation, but it's actually made the products today better than what they were 5 years ago. Why? Because now our caps are higher. Maybe you have an S&P cap was 4%. Now it's 10.5%. Big change. Payout factors have gone up. What is a payout factor? When you decide you want to turn on income in retirement. Yeah. This now all of a sudden, we see a 1 and 1.5% increase. That could be substantially a lot more income than the old contract that you have. So, we see payout factors increasing. We see these caps on these S&P 500 or different indices increase. Maybe it's time to have a checkup on the annuity that you have. Just because what you had years ago doesn't necessarily mean it's the right thing. If we can improve someone's situation where they're getting more income, they're getting higher returns. Granted, those returns wouldn't be guaranteed. It's whatever the indices would do. But, at least we know we still have the downside protection. This is an opportunity to really examine, is there something better today? Because, again, interest rates are making these insurance contracts, these annuities, more competitive today because of the interest rate environment. Take advantage of it now before interest rates start going down, and then
taxes go up, again, yeah. Which could very well happen. So tell me a little bit about this brokerage link is what it is. And not every investment group like yours is certified, I guess, to be a part of this program. But what does it allow you or the customer to do? Yeah,
well, we're a registered investment advisory firm, so that means that we're a fee-based, firm. But this gives us the opportunity to work with a lot of Fortune 100 companies, from insurance companies to automotive to telecom to aerospace, airlines, et cetera. So there's a lot of different companies that actually give you the opportunity to work with an advisor like me or my team to actively manage your 401k. And really what Brokerage Link allows us to do is we open a window inside your 401k. The money stays at Fidelity or stays at Schwab or Vanguard, wherever your 401k plan is at. Or maybe you work for the state of Ohio, like Ohio State University and 403bs. They have Fidelity, AIG, TIA, CREF, and we can go in there and actively manage those accounts as well. So just not corporations. We're seeing nonprofits, Ohio Health, as an example, Ohio State University, where we can go in and actively manage those plans. And what it allows you to do is to have more options available to you. So, as we discussed earlier, you might have 6 or 10 options, and then you have all these target date funds. And, these target date funds I'm not really a big fan of. And in fact, last year in the Wall Street Journal, they talked about how target date funds weren't keeping up. They weren't performing as well. Well, when you have 40% of your portfolio sitting overseas, and 16 out of the last 17 years, international has underperformed U.S. domestic equity. I mean, we're seeing about a 10% difference this year. The S&P's up about 20% year to date. And, we take a look at, this year, the international's only up 10. So you're giving up a lot of growth opportunity. So what we try to do is we try to reduce international exposure, really reposition our clients, reallocate it so where it's more domestic equity. And then secondly, we can show you how we're going to actively manage it and give you more options than what your current 401k plan is. And this is typically the fundamentals of where we start working with people. That's how they become a client of our firm. We start actively managing their 401k or 403b. And then we start working on the other aspects of retirement. How much more should I be putting in? Should I be doing all this pre-tax, or should I be doing more into the Roth? There's a lot of great things, but the younger you are, the better off it is, because we're helping you plan more and more years. Oftentimes people will come to us, from television or radio. They'll hear us on there. They might see us on social media. But the earlier you start, the better off your situation can be if you're working with someone that can help you in all facets of the retirement plan.
Well, so let's talk about the high-end tax planning, because there has to be strategies for those folks, which I am not a member of that community personally, but there are people, the 3 million and up people, that you also work with and you can help.
Well, certainly. And, the majority of individuals out there can take advantage of Roth conversions or charitable intent. But, we have tax attorneys, masters in tax, CPAs that can truly help people. But usually their net worth is anywhere from $3 to $5 million. And again, certainly that's not going to be for everybody, but we can get into, if you're a business owner, how to set up various entities to help reduce taxes, set up marketing companies, a leasing company, captive insurance companies. There's a lot of different things that someone can do to really help their situation. And it's not something that, these are strategies that I'm just telling people. These are the strategies that we do within the pension group that, help reduce taxes. So I personally do these strategies to help myself build wealth. And there's a lot of strategies out there, just like there's an average advisor out there, that you're going to see on every street corner. They're not going to be able to bring you these strategies because they're not versed in it. Just like CPAs, there's a lot of CPAs that I know, the average CPA is just a glorified IRS agent. And no offense, I got a lot of friends that are CPAs, so don't get offended. But the reality of it is, it's like they just check a box. They check a box. And they're not thinking, how can I help this business owner? How can I help this individual? Or maybe you're in real estate. There's a lot of things you can do from a real estate perspective that really opens the tax planning book under Trump's tax law. Now, certainly there's going to be changes in 2026 to that, as we talked about. The reduction, in estate taxes goes from 12 million down to 5 million. The standardized deduction goes from 27,000 and gets cut in half. Okay, and then tax rates go up. So there's also some other factors that play into it, but there's certainly strategies that we can bring to the table. And again, it's not something we're just advising on the tax strategies. I'm not a CPA or masters of tax, but we have those professionals that can really help who are clients of ours, help them facilitate and help them reduce taxes even further.